Welcome to the perfect recipe for retirement rich. The whole purpose to meet people like you who are free thinker. And I'm very glad to tell you that I have had pleasure to talk to Rodrigo Barbosa, an amazing gold mining company from the Mexico, and I'm sure we know Aura Minerals has done a great job, and Rodrigo is one person to credit. And what is very coincidentally here was happening is when I interviewed him, the stock was roughly at 2.7 billion and now it is 3.5 billion. And as I'm meeting you today, and I think you had a silver at $40 something,
That's right.
and it is already 65.
Correct.
So is it my good luck or is it your good luck? Time will tell.
I think it's a combined good luck.
Yeah. So I think you're a long-term investor, and I think I can certainly see the kind of book you have written, The Silver Bull. It is an amazing book, I will say. It's a very short chapters, interesting things, very good research done on the facts by reading other books and talking about the money and the history of money and how you are so bullish on silver. But before we go to that, I think I would love to know more about you. What has pulled you to silver? You are an MBA and you are very close to America, Omaha. I am a fan, Buffett follower. What had stopped you to become a Buffett follower or Buffett practitioner? Apple or Google, for that matter, Microsoft has become 3,000 to 5,000 times. But silver has probably become 100 to 200 times. And I'm sure you know it that these are two different things. And I'm sure you also are bullish on the stock market. Would love to know in detail from you.
I I've got to say that you mentioned I'm an MBA, and that what I found curious in hindsight after the MBA, a few years later, as I became aware of the whole gold and silver space, including the miners and so on, was that there was zero mention of gold in the MBA. And yet gold was, part of our money in some form up until 50 years ago, in the late 60s, early 70s, and until 1971 when Nixon cut the tie to gold. So, it's how can I put this? It's odd, and I don't think it's permanent that we have cut ties to gold for backing currency. When you look back a couple of thousand years at least for gold, and then up to 4 or 5 thousand years for silver. That they've been both almost continuously forms of money all that time, and so I do think that we're going to get back to that. Um, I agree, like you're saying, that everything is in cycles, but I do believe that this is a very long secular cycle that we started back in 2000, 2001 in the gold and silver space, and I think that it's proven itself as a place to be, and I think it will continue to be. I think we're only about halfway through this secular bull market. So the metals, the miners, I believe stand to benefit very much over the next several years.
Peter, they say in Bible, gold is mentioned 100 times and value investing none. What about what about silver? Have you also done that kind of research?
I actually haven't, but I have read something along the same lines that I believe silver is also mentioned a large number of times. I'm honestly, I cannot remember that statistic offhand, but I'm quite certain it's there. In fact, I think that Judas, who betrayed Jesus, was actually paid in silver. So, and I believe it was part of the pay, or it was the pay to Roman soldiers as well. So
Hmm.
it clearly was part of everyday life. There's no question back then.
That I agree with you because there's a famous series called Spartacus, and
Right.
yeah, a lot of dealing has been done in the silver and gold. So that I totally agree with you. Now, I think I still want to ask you that are you absolutely not buying any AI stocks, values companies? Are you not holding them, or silver is part of your strategy and it is a major one, or it is only silver?
So no, it is not only silver, but I honestly am not investing in anything outside really of resources. Everything is resource based. And somebody asked me a long time ago, and even again recently, how do I balance my portfolio if I'm so weighted in one sector? And I tell them it's the barbell strategy where you've got, I can compensate for any, perhaps what I may consider outsized risk. If I feel that things have gotten overvalued, I will build my cash position on the other end. And so that's the barbell. One end is cash, the other end is resources and resource stocks. And if I feel I'm, overexposed one way or the other, then I can adjust those two, and that has served well, actually.
Okay. Now, Buffett said you should have role models. Who are your role models? Who do you look up to?
Um, well, I'm going to say probably some previous. So, I'm a newsletter writer. I look up to successful investors, especially resource and precious metals investors. And that can be anyone from, newsletter writers to individual investors to company builders. The book I wrote, The Great Silver Bull, the foreword is written by Ross Beatty, and he's the
Yes.
founder of Pan American Silver. He's
Yes.
also founded several other, very successful mining companies since then. And he's a serially successful mining company builder. And these are the kinds of people that I do look up to. It's a different, of course, it's a different approach. It's more boots on the ground and physically building through acquiring properties, financing, growing, etc. So it's sort of a different facet of the business, but definitely these are people that have proven themselves over and over and over, and they've created tremendous amounts of wealth and value, not just for themselves, but for many people who've participated. Whether that's people who've worked in those companies, people who've invested in those companies. There's been a lot of wealth created.
Would love to hear about your biggest regret, the mistakes which you don't want people like me and the younger investor not to repeat.
So I would say when you have conviction that there is a bull market ahead, um, you don't have to go crazy in terms of investing in it, but make a meaningful commitment to that space, something that can be, I'm going to say, almost life-changing if it goes the way that you really believe that it will. Again, it doesn't have to wipe you out if it doesn't go your way, but it can mean a considerable difference if you get the kinds of returns that you're predicting. So I guess don't be timid about about investing in a sector or in an opportunity that you really have true conviction has much higher to go.
So, Peter, now you see that silver is just going up like a rigged stock. Now, people who do not have higher conviction, they will definitely will be uncomfortable to buy anything today. But as you rightly mentioned in your book, and I am really happy to read that the kind of precious metal, silver and gold are when they go up, people buy them more, and that's true. I come from the Indian background, and being an Indian, when we buy silver and gold, the household buys silver and gold, they don't even have this thought process to sell it. They just buy as an emotional connect. So now you mentioned about the silver and gold gauge ratio or the gauge ratio. You also talk about silver MEP system in your book. I would like to understand from you that how do you play the silver game? How do you make sure that how do you buy the companies? Which kind of indications make you feel uncomfortable and you probably will sell or book profit?
So, in the book, I talk about how I allocate and how I build the portfolio, and it's really a question of balance. I mean, the way I've laid it out is I've said that the portfolio for me would be 10% allocated to bullion, 50% to large royalty companies, silver royalty companies, large producers, and as well as ETFs, which give you into instant diversification, let's say across the miners. And then you could, so that brings you to 60%. From there, the balance, I would say about 20% can go to growing producers and developers, so sort of mid-sized type companies. And then the last 20% to juniors, which can be anything from very, very small producers to explorers who have a discovery to explorers who are pre-discovery. And so the way that you, one in this space, mitigate the risk is by investing across the spectrum of offerings in silver. And not everyone has to be exposed to the riskiest end of it. And I'll say, I've said over and over, silver has a place in everyone's portfolio. It's just a matter of degree. And silver is volatile, but people need to make that volatility work for them. So let's say someone who is either very conservative or perhaps an older investor might say, well, the exploration side of it is not for me, but I'm willing to invest in, perhaps some of the lower risk plays, and that again would be something like the physical, would be a silver mining ETF. It could be easily, the large royalty companies are an excellent way to gain exposure, and then the large miners as well. I'll give you a couple of examples. In the book, I talk about how two of the biggest market cap companies in the silver space are Wheaton Precious Metals, which is a royalty company. In fact, they invented the streaming business model. And then you have Pan American Silver, which I mentioned earlier. At different times in the sort of first half of this secular bull, which ran from say 2001 to about 2012, 2013, both of those companies were up about 16 times during different periods. And so, of course, their market caps were much smaller when they started, but they were still relatively large in the space, and yet they managed to provide these kinds of returns. So again, you don't have to take sort of outsized risks in this space to have exposure and potential for some really meaningful gains.
So Peter, 2 years ago, when I meet anybody, whether my investor or my friends, I was telling them buy gold, buy gold. And people gold went to 3,600, and I told them again to buy gold. They said how much it will go up. Now I knew my game on gold, but you are even bullish than me on silver, where you are saying $300. Now obviously, for the people who have weak heart, they won't be able to follow you. I also would like to believe in it, but now it is 69 or 66.
Right.
I want to know what do you see in the next 12 months to 24 months? And explain me, convince me that yes, I think I'm also following some news about China. I think I need you to also clarify that to us and our viewers. So please tell me how we should see silver from here.
So, it's, I believe as we speak, it's somewhere around $66. In fact,
I know you're very
today,
happy. I can see that.
setting a new all-time record, which it's done since it surpassed 50 back in, I believe it was October. And so setting new records, almost like on a weekly basis here. So it's really, I'm going to admit it's tough because it's tough to say what to expect because we're in uncharted waters in
Yes.
many ways, technically. The moment it surpassed 50, it was new territory.
Yes.
And so I've heard from very successful analysts, both fundamental and technical analysts, who've said the moment you're beyond 50, it can do anything because there is no sort of playbook for that. There's no clear, obvious overhead resistance. I do believe, however, though, that 50 becomes now a new floor, a support level for the price, and I, you know. $66 honestly surprises me. I didn't think we would be here this soon. I thought perhaps sometime a year from now,
You're
and
on
I found
record. Everybody has, I know.
out.
Yeah, $40.
That's right.
Yeah.
That's right. What I will say is that on a relative basis, it's still cheap. It's still cheap relative to gold. It's still cheap relative to a lot of other assets, and it's still cheap. The miners are still cheap relative to the silver price. I don't feel that a lot of this gain in the silver price has been fully factored in terms of valuation. But if you look at the gold silver ratio, for example, today with the gain up to about $66, the ratio is dropped to about 65. So what we've seen historically is that we are probably actually now going back to, I believe it was the 90s or so. So let's say the last 20, 30 years, we're close to an average. So in fact, at $66 with $4,300 gold, we're actually close to where we should be. What we've seen historically is that the gold silver ratio, when it gets to 80 or above, and then it starts to drop and fall back below 80, then we start to get silver outperforming gold. So if someone understands well the ratio, it doesn't mean that silver has to rise. It could mean that gold falls less quickly. They could both fall. But if you're in a positive environment, then typically means that silver is gaining faster than gold is gaining in terms of price. And this is what we've seen for the last sort of couple of months or so. The ratio peaked around 105, I believe it was back in April, and then we quickly crossed through 80, which is sort of this threshold, so to speak, which we've seen historically, where it tends to have either resistance or support. We've cut through that. I do believe we could be in a period now where it corrects back the other way a little bit, since these gains in silver have been so strong and relatively quick that maybe we start to see gold or see maybe even silver stay where it is and see gold start to gain and take the lead for a little while. And all that being said, when we get these corrections in the gold silver ratio and it starts to drop, it tends to overcorrect. So, in other words, it could go from where it was 105 in April or 80 recently or even 65 right now. Frankly, 65 is about where it should be, but overcorrecting would probably bring it to perhaps somewhere like 50 or 55. And so, that would point to somewhere around maybe 75, $80 in silver. And it wouldn't be shocking at all. I think that we could easily see that next year. One other point is, gold is 4,300. We're getting large investment banks who normally are quite conservative in this, and they're now calling for 45 on the low end, 5,000 on the higher end for gold next year. If we get, something like a 50 to 1 in the ratio, that or 45 for easy numbers, $4,500 gold and 45 to 1 in the ratio is $100 silver. So, if gold only goes up by $200 and the ratio continues to fall, that for by itself could point to $100 silver. And I think that high double digits is looking like quite realistic for sometime next year, and perhaps even pushing this triple digit level. I didn't think it would come this quickly. I'm surprised. I expected a lot of this. The pace at which it comes has actually taken me somewhat by surprise.
I think Jesus has heard you well. My simple question is: are you booking profits? Are you booking profits partly?
Yes, yes.
Or
So the
you-
answer is yes. In fact, I've been doing that with my subscribers in my newsletter, Silver Stock Investor. Um, uh, Last year, towards the second half of last year, the bull had already started. We got a few names in the portfolio that had doubled, and I took them. I suggested to sell half and hold the other half in my view, for the rest of the bull market. And then this year we had another, pretty big handful of more names. I'm gonna guess roughly, probably at least another four, five, or six names just this year that have doubled, also. So booked profits on those, and suggested to subscribers that this way you continue to participate in the upside, and you're at zero risk. So it would be a logical and relatively conservative way to play the market as it moves forward.
So, Peter, before I turn the devil's advocate, I would like to give a contrary view that a lot of things have changed. If you see, Russian equation has changed. Today, central banks are buying shitload of gold and silver or precious metal because what America did in the Russian war is they weaponized the dollar. That's one. The second, the way they're bad mouthing China, and now I think you should know, you will be telling me more about it. China is banning silver from 6th January. Now, how this equation is not changed, and why do you think that we are uncharted territory? Because I believe that this is not what we have seen earlier. This is something different. I would like to know from you, what are you seeing?
Oh, so I mean, I agree with your points. I have been making those same points myself that the dollar was weaponized when Russian assets were frozen. I think that that's in large part what triggered massive central bank buying. I believe that a lot of unreported high net worth and sovereign buying has taken place. I also believe that, China's buying is actually probably well above what it's reporting. And I think that others, when Russian assets were frozen, others had said, I don't want this to happen to me. That was too easy. And so how can I, either gradually shift and build some protection and hedging against that situation? And the answer to them was gold. And frankly, it makes perfect sense because they can easily trade that. It's liquid. Anybody else will accept it from them. And it doesn't have to go through the SWIFT payment system, for example. It's just the ideal answer. So it's not shocking, certainly, that we've seen that kind of reaction. What is impressive is the extent of it and the consistency of it. So we've had 3 years of central bank buying of over 1,000 tons of gold. This is something like a third of all of the mine supply every year. It's something like a quarter of all of the annual supply. So, your listeners should grasp that. Central banks for by themselves have been buying one out of every three mined ounces brought to market every year. That is very, very big buying, and that is what has changed the landscape, frankly, in the precious metal space. It has given renewed, I guess, credibility to gold as money. I believe that's what it's done.
With that, Peter, even that debt equation of US, which is mentioned in a book that every 80 to 100 years that currency, and I'm sure it is not that US would like to have that, but now they have so much of debt, and China, like this tariff for China is winning and US is losing. In fact,
Exactly.
Buffett said that we have a lot of experience with tariff and they don't work. And
Exactly.
exactly for just one set of rare earth metal, China brought everybody to their knees. Now, do you see? I know it is very difficult to say, but do you see that China or Russia are doing something so that the new currency is different because the debt bubble is too big, as you mentioned? There's no solution. Nobody is offering any solution for that.
No, you're right. There's a lot of talk of a brick currency, and I must say honestly, although there is a lot of talk of a brick currency and of it potentially being backed by gold or commodities or precious metals, I don't think that the leaders in the East are that different from the leaders in the West, in the sense that they, fiat money serves their interests just
Yeah.
like it does in the West.
Yeah.
And so I have a hard time believing that they would bring in some kind of a commodity-backed currency. I think if anything, they would rather try some kind of a new currency, perhaps one that brings multiple nations together, but that it would still be, at least to start, it would still be a fiat currency. There's way too much for them to gain, much too much power to yield from having fiat currencies where, you can print as you need, you can create spending programs as you wish. You can support, your supporters as you wish. It helps you to buy votes. None of this is new. It's just too attractive, I think. So I think ultimately, unfortunately, we will get to a point Well, unfortunately, perhaps in one way, maybe that's how we get there. But fortunately, long term, I think we will get to a point where gold in particular will come back in some form as money. And I don't expect that the central planners will concede that willingly. I think they will concede it out of necessity. And so that's one of the big reasons. I don't, you know, I'll say this. What I think will be different about this precious metals bull market is that I don't see it ending the way the last one did in the 1970s. I think this time around, because if I'm right about gold becoming money once again or backing money once again, I think we're going to get to the point where the gold price rises dramatically, even from where we are now. And then once it gets to this sort of new, much higher level, and central planners have conceded that it now needs to be part of our money because we have zero sort of zero credibility, we have zero support unless we absolutely do this, then that will mean that once it's part of the money, it it will remain at a sustained high price. It will not sort of crash, maybe the way it did at the end of the 70s after 1980. And so I think that at least I expect it will end differently this time. I think we're going to get a considerable rise in the price and then a plateau after that. And anyone who's participated, I'm guessing at that point, could probably gradually sell off some of their gold and gold related assets, take profits, and then from there start to look for alternative assets that perhaps are relatively undervalued to gold at that point in time.
I think that timing is the key, and I think that we all are going to falter with. So, do you see any crack in the physical versus the silver also? What is developing over there? What are your thoughts on those? Am I
So
not safe
yes,
buying those? Should I not buy the paper silver? How do I see what is the right instrument for me to buy?
if you want to play in the futures market, it's not something that I follow much at all. I'm by no means an expert in that and don't pretend to be. But if someone wants to play in the futures space, my limited advice to them would be make sure it's short term.
I don't
You
know.
know,
I meant something. I meant physical versus paper because they say
yes,
paper silver is sometimes not backed up by the physical. And then I think you
yes.
mentioned leverage about it. So how much is the physical silver they have in actual, and how much the paper instrument created? That's what I want to ask.
There's about, I believe it's 300 times as much silver traded every day in the paper markets as there is in physical markets.
That's a
Even gold, even gold, to my understanding, is 100 to 1, and I believe silver is something like 300 to 1. So, it's dangerous because if you need delivery, if you or some players actually are buying silver futures because they figure they can stand for delivery. Some markets, like the Shanghai market, I believe, is built for that, for delivery, whereas the ones in the West, like the LBMA in London or the COMEX in New York, are not built for that. There's a very, very small slice of the outstanding contracts that are actually backed by physical silver. So, yeah, I mean, if you actually need the silver, I don't think that's the place to go. I think there's a big risk, and perhaps it's coming sooner than we expect, that someone who does need the physical and has a long futures contract and is standing for delivery will be disappointed, and they're going to be told, "We don't have the silver. We're going to have to settle you in cash." And they'll say, "No, no, no. I have this contract because I need the silver." And then we will start to hear some people screaming. That will not be a happy ending.
that may happen. Now, let me change the chip. We know Tony Makuch. I think he's a very famous name in the this mining industry, and we were bullish on Kirkland Lake Gold, amazing company before it got
Mhm.
merged with Agnico Eagle, and we bought it with a high stake in our portfolio. And then Tony was subsequently has to resign, and he became later CEO of Discovery Silver. And I fortunately followed him and I bought some for my wife, and she has now made 7x this year.
Oh, yes.
And, and what my question to you is that it is just started its first quarter of earning, I believe. Stock is trading at 180p. Don't you see this kind of growth is also developing? And there are some stocks because where Aura Minerals is producing 300,000 ounce equivalent of gold and trading at $3 billion, where Discovery Silver producing very less is right now trading at $4.3 billion, or let's say roughly $3 billion US dollar market cap. Do you believe that there are froth now? There are very companies which are also rigging their stocks at this point of time, or people are just crazy about it, and we should be worried about that as well in the silver
I
space.
agree with you. Yes, I think people need to be reasonable, and I do think that some names, and I believe, have gotten quite frothy, overbought, and that's a risk. There's no question about it, and that is one of the big reasons that I suggest people take profits. If you've got if let's say you held a stock that doubled and you sold half, and then your other half, continues to double, triple, quadruple, quintuple, and on and on. I would certainly not be against taking some profits on even that second half as you make these gains. It's a wise way to approach it for sure. And people I think have to read a lot into sentiment, and sentiment is a big driver, and I think it's very underestimated in markets. It's a lot about a lot of investing, believe it or not, is about sentiment and FOMO, which is fear of missing out. And I talk about that in the book, and I think that silver certainly is very much a victim sometimes of FOMO, and people need to correct for that, and they need to rebalance. And so, yes, I agree. There is some froth in certain names where they're becoming quite overpriced for, future cash flows, so to speak. Agreed, absolutely.
So, Peter, how an accredited investor like me should buy a silver stock? I know you buy some of the very early miners, and you also have a professional what do you call setup where people like me can also be part of it. So my question to you is that today you are booking profits. Are you also buying more companies? Are you still investing in the new businesses? How do you go about it? Is it more about the quality, or is it's also value discipline first? What is more important in these kind of scenarios, and how do you play this scenario, and how do you help us?
First of all, yes, I am adding names. I'm going to be spending the holidays doing more research and
Perfect.
writing up some companies I have on a short list. Uh, you know, Certain things change as like in anything over time, and there have been some very positive developments in a few jurisdictions in Latin America, in particular, where if it's funny, people have asked me, well, where do you find silver? And honestly, it's you look at a map and it's not difficult. Most of it is, if you look in the Americas, all you have to do is look along the western border,
Yes.
and it's all along the Rim of Fire, I guess is what you would call it, right?
Yes.
Ring of Fire.
Ring of fire.
So the western coast, all the way up from Alaska through Canada down through the U.S. and then north, all of North, even some of Central, and then Latin South America. It's all along the west coast, or almost all of it. And so that's where you find most of the silver. And then you find some in Australia, you find some in Europe, Poland, Germany, to some extent in places like Spain, for example, and then in the Middle East as well. And I
Yes.
think Saudi Arabia is an interesting new jurisdiction that is opening up pretty dramatically.
Okay.
Um, Time will tell how much silver they have. They certainly, no doubt, have a lot of resources besides oil that we may discover over the next several years. But they are clearly opening up, being quite aggressive about opening up to private investment,
Okay.
and that will be quite interesting. But that's where you find the silver. Like I say, there have been some political changes that are very promising, in fact, in South America, and I think that's where some of the new names are going to come from that I will be adding to the portfolio. And other than that, I would say that it's it has to be, frankly, it has to be a little bit of a mix between value and momentum because I believe that there is a lot of strong and continued momentum, and I think that people, if at least in this sector, if you stay strictly with value, you'll end up missing some opportunities. Some. It's also very interesting to note that I'm sure your listeners can imagine that as the price of a commodity rises and rises dramatically the way it has for silver, that suddenly brings a lot of projects into what we would call, positive economics.
Yes.
It makes them suddenly profitable where they were not profitable at 25 or $30. At $50, they become quite attractive.
Yes.
And so that changes the outlook. And so people have to kind of go back to their lists and revisit and reevaluate because some things become suddenly quite profitable. I don't know if earlier on you mentioned Eric Sprott as an investor, but he's someone that in the resource space people need to know about. And he said something earlier this year that I thought was very wise. And he said that his big advantage over most other investors is that when he looks at a company and its projects, he uses the spot price, the current price in the metal, whereas most people are using the prices that, average prices that, let's say, analysts are using. And those can easily be 30, 40, almost 50% lower in many cases. And so he feels that they're not giving proper potential to those projects. But by using spot or potentially even sometimes higher prices, if you have real conviction that that's where they're going, you can better estimate or judge where things can go. Uh, over the next several years if you're using spot prices. So that's something people I think need to consider when they're doing their research and evaluating.
Yeah, I think that gives a lot of margin of safety. So
Right.
in fact, it's still I'm seeing the good companies are still projecting on the gold side roughly 2,600, $3,000. They're not going above that. So any project they accept on that IRR basis, they're not considering today's price. In fact, even market is not pricing today's
That's
valuation
right.
on 4,300. So even market is also a little cautious. But I still wanted to check with you that when you invest into these companies, they do not have the profitability or let the first mine is still not out. How do you value them? Like you are focusing more on the promoter, the
Yes.
property. What is the most 3 points or 4 points which is very important for you to evaluate these companies?
So I'm going to say one of the, one thing that you can do is you can value in terms of value relative to the sector or to peers, and that's always helpful. And one way, for example, is that let's say you find a silver company that has a deposit. They have X number of known ounces. Let's say it's 100 million ounces. And, if you look at the company and the market cap is $100 million, then, of course, there's a lot of other factors because, you have to make assumptions. But let's say once that silver starts to come out of the ground, do you get 100% of the silver? What are the recoveries like? Are you getting 80% of the silver ultimately? So on. But as sort of a first level filter, what you can do is compare a company with the average and with some of its peers, either jurisdictionally or size or let's say grade, for example. And you can say, um, how much am I paying for every ounce in the ground? And if I'm paying $1 for every ounce in the ground, that's quite cheap. Whereas, some peers, for various reasons, may be trading at $3, $4 per ounce in the ground. And so on a relative basis, this particular company might be quite attractive. You have to look beyond that afterwards. Of course, look at jurisdiction, look at where it stands maybe on a permitting basis. You you have to look at, like I was saying, metallurgy, which tells you potentially how many ounces you will actually produce from what you take out of the ground because you won't recover all of them. High recoveries would be perhaps mid to high 90s. Low recoveries might be around 60% of silver. So that gives you, some idea of the kinds of things to consider. And I think investors have to be careful too. I often point out that there's a lot of companies out there that have silver in their name, but they're not, for me at least, they're not true silver companies. And when I started the newsletter, I quickly discovered that because silver is a byproduct, about 75% of produced silver is a byproduct of production of other metals like gold, copper, lead, and zinc.
Yes.
Only about 25% comes from what we call primary silver mines. So that's one thing. The other thing is that you have companies who call themselves, Acme Silver, for example, but if you look at their deposit, only maybe 15 or 20% of the value of that deposit is actually coming from silver, and the balance might be some of these other metals. And that's just, what Mother Nature, how she created that deposit. But for me, unless we're somewhere around 40% of the value in the ground being silver, or if it's a producer, about 40% of revenues coming from silver, then I tend to not consider it a silver company. I will make some exceptions when there is, let's say, sufficient gold or gold production that helps to push the gold and silver combined, comfortably over 40%, because I favor, gold because it's a precious metal versus a base metal. But these are all things, that investors need, I think, to consider when they're investing in silver companies.
So Buffett said, I would like to invest in a business, even if a fool runs, it should make money because one day a fool will. Are you telling the same thing that the property is more important than the management? The first thing is the property?
I would not say that in the case of resources. I think
Yeah.
that the people, in fact, probably are more important because I've seen so many times a property that looked sort of, I'm going to say, mediocre maybe, but in the hands of the right people, they were able to resolve perhaps outstanding issues. They were able to, through some very, very good exploration, geology, all of that kind of sort of technical work, discovered a lot more resources that were either nearby or even just lying deeper below the existing deposit. So, and that is often the case. There's often a lot more of these resources right around or right below where what we already have identified. And so I think in the right hands, you can do some fantastic things with what might look sort of mediocre to start out with.
Okay. I think Rick Rule is very much against CEO parting in the night. I think you would
That's
have seen
right.
that. What's your take on it? Should be a family owned or the family driven business, or it should be a professional run business, which is have done better in your portfolio earlier?
Yeah, I think professional. I would say
Okay.
professional for
Okay.
sure.
So
Yeah.
yours
I
is a
mean,
different thing.
there are always some exceptions, but I think those exceptions are even the successful ones are the ones where it's family owned, but the family knows its limits and they bring in, all of the required expertise to make sure that things run well. And they're perhaps more to guide, to finance, and so on.
Yeah. So family or professional?
Yeah, I would say professional.
Professional. Okay. So now coming to the various fields which are using silver, like solar, the EVs and the electronics, and the AI is also now pushing the silver demand very high. Now there's some news coming in that the it's a possibility that solar will take away the other metal because silver is becoming costlier. Do you think that is a case and that is possible? That solar will be not dependent on the silver in the future if the prices goes to, let's say, 80 or 90?
So, I mean, a much higher silver price certainly does become an issue for solar. There's no doubt about that because, even at lower prices, it was still a significant part of the cost of producing a solar panel. There's been a lot of research and a lot of effort to maybe try to substitute. That hasn't happened in any realistic way as far as I've seen so far. There have been efforts with copper. Copper is way less efficient in solar panels. It doesn't last as long, it corrodes earlier, and so on. With these higher prices, the manufacturers have done as a lot to try to do what we call thrifting, so to minimize and squeeze out the amount of silver that they require in each panel. There are limits to that as well. And and a lot of that in terms of consumption has already been compensated for with our shift from less efficient to gradually more efficient solar panels. And this new technology that now is very, very quickly being adopted, it's called TopCon, and it's replacing previous technology called PERC. And TopCon requires 50 up to 50% more silver per panel than PERC does. So
There's
even if
more.
you can 50% more. So even if you can squeeze out how much you need per panel, new technologies are still requiring more silver, but they're more efficient and they're
Yeah.
producing more energy. So that justifies additional cost for additional silver. And by the way, Bhuvan, the next level of technology. So after TopCon, there's something called HJT, and that is slowly being adopted, gaining some weight as well in terms of the manufacturing of solar panels, and that requires up to 150% more silver. So it's going to be hard to get away from silver the way it's looking right now.
I hope we don't regret booking the profits.
Right, right.
Okay, that's a good one. So you're saying that silver is more going to be used because technology demands it, but overall the cost of the panel will be lower, so that is justifiable.
It helps to balance it out to some extent. But I think that if anything, perhaps the cost of energy will have to go up. Already, solar is one of the cheapest forms of energy, and
Absolutely.
you alluded to data centers and AI. Well, there's some interesting things here where I think that the demand for solar is going to continue very strong because the US represents about 80% of data centers globally, and the growth in electricity demand from data centers is expected to go up by, I believe it's 22% over the next decade.
Yes.
You layer on top of that, you layer AI electricity demand. That's supposed to grow about 31% per year for the next 10 years. So this is only going to require more electricity. Already, these facilities, the data center managers are being told by the utilities, we can't don't count on us. We cannot provide you all this power that you're going to need. So they're having to become self-sufficient. And initially, we saw some of the big players like Microsoft and so on go to nuclear because there was some unused capacity. But that is a very expensive game. Not everybody has the deep pockets for that. There's a long lead time if you have to build it from scratch because you have to finance, permit, build out, and then actually get it up and running. So I had said that the fallback was going to be solar, and not everybody agreed with me, but I'm seeing that it's turning out to be the case. We've seen that in the past year in the U.S. Solar was taken up by tech companies that were looking to be carbon neutral at 5 times the rate of nuclear. And there's also a game changer in the space, and that is batteries. Battery costs are coming down at a rate of about 50% their cost over the next 5 years. That's the pace that we're seeing. And the batteries are being adopted very quickly by the solar industry. We already in 2025 are going to be installing about 60% of all of the solar capacity in the US in equivalent battery capacity. So that means that batteries are now making solar into a baseload power source because the batteries will provide you energy at night when the sun is not shining. It also is attractive to the data centers because it makes them completely self-sufficient. They're not relying on a utility to provide the power to them. They're off the grid, so to speak. And that once you've amortized the cost of that solar farm, then it's pretty cheap energy.
I'm convinced with you. In fact, while we both are talking right now on Zoom, we are increasing the usage of silver because
Yes, yes.
AI and data center both are used. But having said that, and I think I'm also a big proponent of what Elon Musk is doing. Solar wall is a hit, I believe. And as we all move to the bigger houses, the energy demand goes up, and India is already on a rampant on the solar panel side. In fact, incentives are put in place that if you install the solar in your house, the kind of subsidy government is giving. In fact, they made the farmer to produce the electricity and they're putting that into the grid. So look
Wow,
at he has a big let's say farm for crop, but he also has a lot of land which is unused.
sure.
So not only he will use the solar panel to for his electricity production, he'll also supply to the grid because that is the only way we can stop the fall of the rupee or can be energy efficient. But my further question to this is, don't you think with the technology advancing like this, the inflation is under control?
The governments are taking care of that as my
No, but oil price is not going up, Peter. Oil
No,
price,
this is true. This
yeah.
is true. Absolutely. But I think we're probably getting close to a limit on the downside for that. And if anybody asked me where I can see some value, that would be an area where I'm starting to see a lot of value is in the oil, especially in the oil and gas sector. But you're right. That helps. That absolutely helps costs come down. Oil is the most widely used commodity in the world, and we make all kinds of things from it besides consuming it. We make plastics and unlimited sort of things well beyond that. It's all around us. So that certainly helps, but I think that it's one input. It's an input important one, but everything else is going up so much. Labor is getting more expensive. We're still in this energy transition, which is shifting away from oil. That's probably part of the reason oil is coming down, is we're shifting to these carbon-free or low carbon sources of energy. You have increased defense spending. All of these things are feeding, I think, into structurally higher inflation. What I would say is enjoy low oil prices while they last.
So I'm in Dubai. I think I'm enjoying the low oil prices, but I would also like to tell you that Dubai and Abu Dhabi they have installed one of the Asia's biggest solar panel and probably the main electricity company is using it. But still, a lot of big cost in the townhouses and villa is because of the electricity because electricity is still
Yeah,
costlier. But solar seems to be a revolution whenever the solar wall will come, but it is started. Where India is
exactly.
doing it faster, the countries which are producing oil, because still in Oman and Saudi Arabia, the oil is dirt cheap.
Right.
So they're still controlling the way they would like us to use the solar to create electricity or produce electricity. But I think the technology revolution nobody can stop, and it's a need, Peter, because Peter, I might want to have a bigger house, more electricity, but I want to reduce my cost because
Right.
else I will be poor. So I think that is happening, and I think everybody has else has to do this. Now, what are your top two non-negotiable in a silver miner?
So I would say you're saying in terms of what aspects I need to
Yeah,
I
it's
look
a
at.
no. If you have these 2 points not there, you will not even look at it.
I see. Okay. So the first is going to be the people. The people, you have to have people who have somehow, proven themselves previously, whether that doesn't have to have been, leading a company before,
Yeah.
but it has to be at least in a position previously that they can point to some successes. People is everything in this business, and they've turned, like I mentioned earlier, some mediocre properties or projects into successful ones because they knew how to navigate this space. The other one is I'm going to say scale. You have to have the potential for scale, whether that is in discovering a large enough potential eventual economic ore deposit, or by growing. And that relates back to the people, but still the potential for scale to be able to, even if you're starting out with a smaller producer, but the management has the vision and they have the ability, in part because of either access to capital, because of where they're located, that there are other producing mines, for example, that they can acquire, they can build on. And I've seen that happen multiple times where they've been able to do that. They started out quite small, but they've grown and grown and grown over time. And then before you know it, they're producing several million ounces of silver a year where they were, somewhere sub a million. And so I would say those are the first two things to look at: management and the potential for scale.
Peter, are you telling me that from 2011, when the gold prices peaked, till 18, when they were actually on the downward trajectory because interest rates were probably going up, are you saying with your approach, even those years, you made substantial money in the silver miners?
So I would not say substantial.
Okay, thank you.
Because
Yeah.
I was patient, patient because I had conviction, and in these cases, there is where you for sure need to, I'd say, be very selective, more selective. That's more important than ever. You need to be in, I think, the really high quality producers that are still able to make profits at relatively low prices because their costs are so low, and then you have to play, if you're going to play sort of in the other end of it, which is the exploration side of it, you have to be very selective again. And you can have, even in that kind of environment, the market recognizes a big discovery, and we've seen that happen multiple times. I've seen it in the gold space, I've seen it in the silver space, and even if prices have been flat or falling, but there's a big discovery, the market rewards it, and that's sort of the other way you can play the higher risk end of it.
Okay. And what kind of holding period, what kind of patience one should need for a story to play out? 1 year, 2 year, or 5 years?
Oh, I would say easily five. I still think we're in the second half of this secular bull market, which for me began in 2001. And I remember reading a very interesting thought by Jim Rogers, who's a famous resource investor. And he said that a true secular bull market typically falls by 50% right around halfway through that market. And the gold market is almost a perfect textbook play out of that. It peaked in 2011, in September of 2011 at $1,900, and bottomed in December of 2015 at 1,050. So that is almost exactly half. And I believe that marked the bottom of the midpoint
Hmm.
of the secular bull. And I believe that from there, although it took several years really to start, make a marked rise in the gold price, we didn't look back and look below 1050 after that. And we had, starts, spurts, and pullbacks and so on. But I believe that was the beginning of the second half. And so I think you have to have a pretty long, time frame. And I think that's what works against a lot of people. In fact, I often say patience is the rarest commodity.
Absolutely.
And in investing, that's going to work against you.
And the kind of patience you're saying, like next 15 or 20 years, I think only people like you who are only into one resource or one silver, like who eats, I think I should be seeing a lot silver behind you. I'm not seeing it because it is like eat silver, see silver, watch silver, and even the
Right.
laptop should be of the silver. So I think
Yeah.
that kind of framework you have in your mind. So
Yes.
you're very set that you will be on, like Eric Sprott is a master of one. All his life
Exactly.
he focused only one thing, and I respect, truly respect that. I think Jeff Clark only talks about gold, and now you who only talks about silver. So I think I respect a lot about your mindset. Not easy, not easy.
No, no, for sure. And then, like you say, it's patience. Sometimes it's patience to a fault, but it has been rewarding. There's no question.
I'm sure I'm very happy for you. Two killer questions you ask a mining CEO when you are evaluating the company, spot on.
So I would say, how much of this stock do you own yourself?
Skin in the game. Okay.
Yes, skin in the game, exactly. And the next question would be, what's your plan for the next sort of 2 to 3 years? How are you going to meaningfully grow, this company over that kind of time frame that is going to give me sufficient reason and patience to participate and to hang on, even when you face some headwinds. So those are the two biggest questions for me. Are you in the game, and what's your plan to get us, to a multiple of where we are now in the share price?
Peter, one more question. I think you have visited a lot of mines.
Yes, yes, exactly.
I would like to ask this question from the perspective of our children who might probably would like to have a career in geology. I want to ask you, how does it look? Is it safe? Are there many cases like in the coal mines? There are many cases of people dying. How
Right.
is the environment there? How is the air? How is the feel?
So, I mean, it's something that you get used to only very slowly because it is a very particular kind of environment. And what I will say is that, I've been fortunate. The ones that I've visited are well-run mines, responsible companies that are respectful of not only security but also the environment and so on. And if or if you're interested in visiting a mine, but management is not taking the steps to make sure that you go through proper training, security training, even if it's just to go into the mine for an hour. You probably should spend at least an hour to two preparing to go into a mine for an hour because you need the right equipment. You need to know what the procedures are. You have to know how to react and know what to expect. And so, like I say, these are all crucial aspects. But as I say, also the mines that I've visited have been very well run. It doesn't matter if they're located in sort of first world or third world. If the management and the company is responsible and respectful, then it's run properly, and you can have a lot of confidence that they're taking all the precautions necessary.
No discussion can be complete without discussing the risk. What do you think could be the biggest bear case for silver?
So, I mean, I know this is might sound silly, but I have a hard time, frankly, finding a meaningful bear case for silver. In sort of the near term, the biggest bear case I could find is recession. We know from history that silver struggles during recession, but it typically outperforms. If you look at gold, for example, compared to gold, it outperforms gold leading into a recession. It underperforms gold during a recession, and it outperforms gold coming out of recession. So overall, it does better. And so, part of the concern is that because about half of silver consumption is for industry, that investors will say, well, okay, there's risk of, or we are now in recession. There's going to be less consumption of silver, so I'm going to sell my silver. I'm going to sell my silver companies, and that can potentially put some pressure. What we've seen in the last couple of cycles is that governments, for better or for worse, react quite quickly,
Quickly, very quickly.
sometimes too quickly and too much, often too much, or usually too much. And what they do is they try to compensate and they overcompensate. And they will say, oh, well, we're in a recession or we're heading into a recession. We need to print money. We need to encourage businesses in the meantime. Infrastructure is a big one. It's an easy sell because most people say, hey, if you're going to spend on infrastructure, at least somehow I'll benefit from that, roads, the electricity, and so on. And also this whole green transition is quite popular and accepted. And so, to spend money to move from high carbon to low carbon source of energy is again an easy sell. So silver is a big part of the low carbon story with solar panels, with wind. Even there's aspects of silver that are in wind, that are in nuclear, and so on. And so I think that that can help compensate for the consumption of silver during a recession. The other and I think even much less likely risk for a big bear case for silver is if somebody would somehow magically discover a huge above ground stockpile of silver. And I'm talking, maybe a billion or a few billion ounces. If unless that
But that's
happens,
not possible. You wrote in the book, I read it.
Exactly, exactly. So yeah, I mean, it's looking very bullish. I don't want to be sort of a perma bull in this, and saying that nothing can go wrong because there are always some risks. But overall, it's looking quite bullish for many years still.
So in fact, diamond was a scam. I think we all know it. So my wife was asking me to buy a diamond, and then suddenly this lab-grown diamond came in, and a lot of people are now making it. And the diamond value with the lab-grown diamond is, I think, 1:100, not even 10.
Right.
And the first thing I saw when I was making good money in Aura Minerals, I said, let me see. I hope men are not powered to make gold. Though,
Right.
though gold is available so much and silver is available in the crust, but not on the
That's right.
surface of the earth. And I was
Exactly.
very happy to see that with the nuclear fission and the fusion, they could make zero point 0.1 milligram gold, and which is very costly. Have
I
you
can
also
imagine.
looked for silver, something like that?
I haven't looked. I mean, I'm certainly open if I hear articles or headlines along those lines. I would absolutely dig into it. Gold, for example, apparently is common in seawater, but the degree or the concentration again there is just so low. It doesn't pay to go and try to farm it out or somehow filter it out of seawater. I've not heard anything in silver. In fact, I've heard the odd time that in gold that in China, for example, they think they may have found some very very large gold deposits deep down in the earth, and these stories have come up sort of maybe every so months or so, honestly, and I just have not heard anything similar in silver. It's interesting that silver is only mined at a rate of 7 to 1 ounces per year, the rate of gold, and yet it trades for 10 times that right now.
Yeah,
Sorry,
actually,
1/10, right?
one
So
tenth, very
10,
small market.
so
Yeah.
exactly. That's right.
So I'm gonna ask you some rapid fire questions. So are you ready?
I am ready. Yes.
Silver is a hedge against inflation, debt, currency risk, it's an industry story.
If I had to say one, I would say ultimately it's money. It will become money again.
One myth about silver you wish should die.
That it's too volatile to invest in.
Okay.
It's not. It's a matter of degree and planning.
Why it is not?
Because in fact there's some interesting research from Oxford Economics about 3 years ago. They looked at the average portfolio and the exposure to silver, and you're probably familiar with something called the efficient
Market theory.
right,
Yeah.
exactly. If
EFT. Yeah.
efficient
Efficient market theory.
portfolio,
Yeah.
right? And
Yeah.
so if you include silver, they said on a medium risk portfolio, if you include the proper allocation to just physical silver should be 6%. We are at the average person is at 0.2%, and it's indirect exposure to silver. So the average investor would have to 30x their exposure to silver just to get to what is recommended as the appropriate amount to get the maximum benefit and to for returns and minimize volatility in the portfolio. So we're a long way from that. I think we're gonna certainly work towards that.
Obviously, I think I start now buying silver crockeries because I realize that if I buy melamine or let's say bone china, and there is a risk of breaking them, and the values don't go up. But as a value investor, if I buy silver crockery or furniture, even if they let's say bend in the shape, after 5 or 6 years, I am able to replace them at a higher value. So I have learned that lesson. I don't know whether you do that. Do you buy silver crockeries as well?
I don't actually, no, I don't. But that's a wise approach, frankly. I like that idea.
Thank you. You have one piece of advice to the US equity investors who are adding 1 to 5% silver sleeves in their portfolio.
My one piece of advice would be make it the 5%, not
Oh,
1%.
okay. Okay. So you want them to
And
buy on.
and hang on.
Hang on. So are you saying never to sell it? Never ever to sell it?
I wouldn't say that. No. In fact, I talk about that in the book, and I do believe we will get to a point where people probably should, if they bought early enough, sell, I would say probably substantially, most of their silver, physical and mining stocks in particular. I think we're going to get to that point, and we talked about that earlier. But I would not say ever to sell all of it. Hang on probably to some of it permanently. But I think we're going to ultimately get to a point where yes, this market will peak. Again, I don't think it will crash, but I think it will peak and plateau. And when it does, I think that would be a good time to sell perhaps the majority.
Will the last rate cut be a great time to exit? Because
Uh, yeah,
you know
that's a
what
good
happened.
question.
Yeah.
Right. I don't think so because I think that, so you're saying as they continue to cut and then eventually have reached a bottom. Is that what you
So
mean?
it is very simple. There is a
Yeah.
story that dollar is going down the dust. But if you look at dollar, it is the dollar index is still at 96.
Right.
In 2008, we have gone to 78.
I see.
And that's not the case right now. So it is
Right.
actually gold and silver going up and dollar not going down against the basket of currency.
Right.
So, and the reason the gold and silver are going up because of the negative interest rates, because the only tool US has to reduce the burden is to reduce the interest rate, but that is invariably picking the inflation up.
Ah, yes.
Because, and if they will not do that, the debt burden will go up. So they're in a vicious cycle.
Absolutely.
And there is a possibility that they will debase their dollar because they also have gold reserves, and then they can repay the debt. Who knows who will do it, why they will do it, because they are 5 years in the skin in the game. Elon Musk also came to help, and we all know what happened.
That's
Now,
right.
now probably after 2 years, we have a change in the government, and something else might happen. Now, imagine interest rate goes further down, and now the negative interest rates have peaked. At some point of time, Fed will change the course and will start
Right.
increasing the interest rate. The fiat currency will attract investor because it is a safe haven.
Oh,
Gold.
sure.
In fact, I want to tell you that some of the people who buy physical silver, they keep in their roof.
Yeah.
In
Okay.
some of the religions, there's a belief that they do not want to buy paper gold or paper silver.
Understood. Right.
I'm sure you have those friends. So they actually buy silver, and silver is very big size, and then they keep it on the roof. So all I'm trying to say here is that when the interest rate will start ticking up, dollar will start again commanding its value till we find another currency, or maybe China succeeds, if at all they would like to succeed. Who knows? Because the way you have written in your book, I believe, or probably I read it, that one big economy uses this another against the another big economy, and I think you talked about the iron, actually the iron you talk about, and how they blocked the British. I think they blocked the British or the France, and yeah. So I think the similar thing China might do is because silver, after the rare earth metal, silver is one particular what do you call rare earth metal where China has an edge.
Right.
Yeah, it's the second largest producer as per you,
That's right.
right? So if that happens, that yes, we all will go wrong in silver and gold. But having said that, that doesn't happen. In the normal course, again the interest rate cycle will reverse, and the interest rate, or probably again will have more dollar because the only
Right.
solution they have is to print money. We'll see some more upside, and then they'll increase the interest rate, and we'll see a plateau of a 3 to 4 years, like we see from 21 to 24, I think.
Right.
Hardly 3 years we saw it. That's what my thinking is. And you know how
Yeah.
the yeah, nothing will be
Absolutely.
there. Yeah. So
Exactly.
yeah. So coming to our rapid fire round, I would like to ask you, if you only watch three dashboards on a weekly basis for silver, which are those three dashboards?
For certain, one of them is this website called Kitco, where they have been a leader, in fact, even in the internet space for in terms of popularity for websites. But they are a bullion dealer, and they have basically an extensive array of news. They have live pricing for gold, silver, and the other precious metals. They have ongoing news in the space, even including things like crypto, but mainly gold and silver and mining and so on. That is for me an absolute must. The other thing that I watch is the positions of hedgers. So, how much do hedgers own of silver futures? Again, I'm not an expert and I don't follow this space closely, but following what hedgers does because they are the smart money in the space, and you can see when they are um, they're usually net short, but it's either a large, they're either neutral, so zero net short, or they're very net short. When they're very net short, it's because they think that the price will fall. When they're neutral, is because they think that there's a lot of room for the price to go up. And right now, they believe that they're actually in between. So we're neither here nor there. But
Yeah.
watching what they do, them being smart money and hedging, often for large producers, they're hedging silver for large producers. They have some of the best information and the best sense of which direction the silver price is going. So I watch hedgers. And then the last is the large silver backed exchange traded products, silver ETFs, both the physical ETFs and the silver mining ETFs. And that gives me the silver ETFs when I can see how much what their holdings of physical silver are. If it's trending upwards, downwards, if it's sideways, that gives me a sense of how the broader retail investor is interested in silver or not, and then. To get an idea for the mining space, the silver mining ETFs. I watch SIL and SILJ. Those two ETFs give me a good overview of the direction of silver equities.
Any comment on SLV? Is it a safe ETF to buy?
SLV, not my favorite. I prefer my preference is we mentioned Sprott before, so Sprott is a large Canadian investment manager, and their focus is on resources almost exclusively, and they have their own physically backed ETFs, silver ETF, amongst others, silver, gold, etc. And I've looked at the construction of different ETFs, and theirs for silver is the one that I have the most confidence in.
So Sprott has 1:1 ratio, like how much the physical silver they have, that much only.
It's 1 to 1. There's no leasing, there's no leverage. It's actually held. The physical silver is actually held at the Royal Canadian Mint. Yeah, it's a very robust product in my view.
Great. I think that's one of the greatest input I got. Now, the biggest mistake new investors do when they start investing in silver mine.
I would say they buy too much of a given stock at once. Yes, it might even, depending on the environment, it might end up even costing you a little bit more, but you can minimize your risk to some extent if you do what I call layering in. Let's say, you say, I have X number of dollars, $5,000. I want to invest in a certain company. Well, maybe you can buy in chunks and say the first chunk will be 2000, and then the next chunk will be another 2000, but I will buy the first 2000. I will watch the stock, see how it behaves. Is management doing what they say they will do, and so on. If the price comes down and nothing's changed, my thesis is still the same and I'm still very bullish on it, I may take advantage and buy a little bit more and average down a little bit. But if I see it's moving up very quickly and I'm in that kind of environment, I might also change my tact and say, okay, I'm not waiting for the balance. I'll put the rest of the money to work and fill in my full position. So it's buying too much, I think, right up front.
I think they get carried away in all the whenever they enter, they enter like this and very little of study, and they
Right.
have a large position, and then the only thing they do after 3 4 years, they book their losses and they never come back to the market.
Exactly. Exactly. And then they do us a favor.
Yes,
Because-
yes, exactly. That's the
right?
point. Yes, correct. Now, very unfortunate for them. I think a silver bull market tell that confirms that we have entered the next phase. What will be that for you?
I would say when we talked a little bit about this, but the gold
Yes.
silver ratio gets below 80, where we are now, and it keeps falling consistently. If you see that happening, this is a pretty bullish phase, at least for the market. And I think that you can expect that silver, if you're in a positive environment overall for precious metals, that silver will continue to do well, and its gains will continue to outpace gold's gains. So that is a big one. The gold silver ratio below 80 and continuously falling.
So I think that's all from me from the prepared marks. I think I would like to thank you so much. One thing I also want to comment about you, you are like water. Like Bruce Lee said that be water, my friend. You have been so deep in the space in silver and you are now working with these entrepreneurs and the CEOs. But I found this podcast so natural that you've been giving me an opportunity to talk as well. And I have been also been adding some of my information, and probably you're also taking that as a takeaway. And I also learned a lot from you. And I would wish that all of us do deep study, be very, very focused. And I want to also tell you something which I think you will like and you would like to take it. So in your book, you talk about the history. There's a spiritual significance. You would have heard about a name called Arjun. You must be having some friends named Arjun.
Ajun.
Yeah, from the Indian continent, if you have some friends, they are called Arjun, right?
It sounds familiar, yes.
Yeah, so you have heard about Krishna also, I believe. The word
Krishna, for
Krishna.
sure.
Right.
Absolutely.
So, like Jesus is there in for Christian, for Hindus, there's a god called Krishna.
Okay,
And there's a big text called Mahabharata. Mahabharata means the one big story.
I see.
And there comes a book called Bhagavad Gita, the song of the god, equivalent to what Bible is, or let's say Quran is, depending on how you take it.
Sure.
Now, these two characters, one is Krishna and the Arjun. They are the main character. Now, Arjun is actually Argentum.
Ah, wow.
Now, how you substantiate the theory? Sanskrit and Latin, the lot of words are similar. They all come under the Indo-European root languages. And in the whole episode, you can actually search this on Google and you can actually see this. Whole Mahabharata, that episode which somebody made, Arjun was wearing silver clothes. Now, what does it signify? It signifies purity.
I see.
So one who is pure, the God comes and helps him out. Now, the interesting part is what Krishna was wearing throughout the Mahabharata.
Right.
Any guesses?
Might be gold.
Yes. So, so he was actually wearing the golden clothes and aurum, basically because we call it aura also, right? It's an aura.
Right.
So
Right.
aurum goes to, because gold is at the higher pedestrian.
Yep.
It has to be something very close to God. And by the way, we also the goddess of the gold is the wife of the Krishna,
Okay.
or the god in the Hindu religion. So I think there is a big mythological or spiritual whatever significance you say, and I think I'm absolutely with you on that, that they might come back as a currency.
Yes. Yes.
So thank you so much, Peter. Would really, really appreciate your time, and it was great talking to you. Thank you so much.